UEM continued its positive trend for the year with February's NAV total return up by 3.7%, although underperforming the MSCI Emerging Markets Total Return Index, which was up by 7.4%. Several developments during the month contributed to the heightened uncertainty in global markets. Geopolitical tension intensified between the US, Israel and Iran, ultimately escalating into armed conflict on the final day of the month after the markets had closed. Tariff uncertainty also resurfaced after the US Supreme Court ruled against President Trump's International Emergency Economics Power Act, resulting in Trump subsequently introducing a temporary global tariff under Section 122, with Brazil, China and India emerging as relative beneficiaries. US economic data also presented a mixed picture, raising questions about inflation persistence and the pace of potential interest rate cuts. AI-related developments also drove market rotation away from software and data companies towards semiconductors and hardware manufacturers. As a result, the S&P 500 declined by 0.9% and the NASDAQ fell by 3.4%. Within emerging markets, semiconductor-heavy Korea and Taiwan benefited, with the COPS index rising by 19.5% and the Taiwanese market being up by 10.5%, whilst Chinese markets were pressured by both the AI-driven rotation and concerns about the domestic economy. The Hang Seng declined 2.8%, while the Shanghai Composite Index rose by 1.1%. India saw a similar pattern, with weakness in large IT stocks contributing to the Nifty index declining by 0.6%. Elsewhere in Asia, Thailand's SET index rose by 15.3%, following a decisive election victory for the ruling coalition, easing concerns about political gridlock. In Latin America, Brazilian's Bovespa index was up by 4.1%, supported by foreign inflows, expectation of rate cuts and relative attractive valuations. Mexico rose 5.6% as markets looked past the unrest following the removal of El Mencho. Meanwhile, the Colombian and the Chilean index declined by 10.2% and 4.7% respectively, reflecting profit-taking and political uncertainty in Colombia ahead of the elections. Portfolio-wise, there was one change to the top 30 holdings during the month, with Guangdong Investments, a Hong Kong-listed water utility company, replacing InPost after the position in InPost was exited following an indicative takeover offer. 4 holdings in the portfolio gained more than 10% during the month. International container terminals rose 11.8% due to strong operational performance and improved sentiment after the removal of Trump's IEEPA tariffs. Axia increased 16% after strong 4Q results and benefits from the rising electricity prices. Capel gained 11.4% as supported by again strong operational performance across its business segments. And Sonatel rose 12.5% following strong results and a dividend increase. 4 stocks in the top 30 underperformed in February. Coffee Colombia fell by 14.4%, reflecting market sentiment affected by higher political volatility and a weaker macro expectations. FPT declined 11.2% amid softer valuations for software companies. Korean data center company Kinks dropped 11%, and Turkish airport operator TAV fell by 11.1% following mixed 4Q25 results. UEM's share price ended the month at $2.96, up 2.8% in February, with a discount to NAV increasing to 10.5%, and UEM continued to buy back shares during the month. For more details, do please read UEM's February fact sheet, which is available on the website at uemtrust.co.uk, or follow us on LinkedIn for more updates and insights.